Let's talk about those slick investing apps on your phone. You know the ones. They promise to make finance easy, accessible, even fun. But there's a whole story happening behind the screen. And trust me, it's one you need to hear.
It all kicks off with this amazing idea, democratizing finance. Sounds great, right? Taking power from the big guys and putting it right into your hands. But this quote right here, it hits on the real question. Is this actually about your power, or is there something else going on?
And to understand what's going on, you have to get the scale of it. As of 2024, there are over 15 crore demat accounts in India. I mean, just stop and think about that number. 15 crore. That's more than the entire population of Japan. The growth has been absolutely explosive. Okay, but here's the twist. Here's where it gets really interesting. You've got 15 crore accounts, but less than 4% of Indians are actually active long-term investors. So if people aren't really using these apps to build wealth over time, what on earth are they being used for? Well, that gap, that huge difference between accounts and actual investors, that tells you everything. These platforms, they're not just neutral tools, not even close. They are powerful, finely tuned behavioral engines, and their main goal is to keep you hooked, to keep you engaged.
So let's really pull apart that marketing phrase. Is this truly finance for everyone, or is it something else? As we see it, it all boils down to three big hidden problems.
First on the list is what we can call the gamification trap. This is where the line between smart investing and, well, just playing a game gets deliberately blurred, and it's a very, very slippery slope. So on one side, this is what you see, right? You get these fun animations, celebratory confetti pops up when you make a trade, maybe you get a daily streak for logging in. It feels good. It feels like you're winning. But then look at the other side. That's what it's for. All those fun things are designed to make you trade more, to churn your portfolio, and ultimately to generate fees and valuable data for the platform. And this quote just nails it, doesn't it? It's not really an investing platform, it's a casino, but it's dressed up to look like financial empowerment. Every little dopamine hit you get is designed to get you to place another bet, another trade. Now, that brings us to the second hidden cost, which is even bigger. It's all about what's happening with your data. Because if the gamification is the hook, your personal data, that's the real treasure they're hunting for. Here's the playbook. Every single thing you do on that app, every stock you look at, every swipe, even how long you pause before you buy or sell, it's all tracked. That behavioral data is then bundled up and sold to the highest bidders. And who are they? Often, they're the same massive hedge funds these apps claim you're competing against. They pay a fortune to see your patterns, to predict your next move. Which means, and this is the key takeaway here, you're not the customer. Your attention, your behavior, your data, you are the product being sold. And that completely reframes the whole idea, doesn't it? This isn't a story about empowerment. You could argue it's a story of exploitation. Your financial decision-making is being colonized for somebody else's profit. So all of this is happening in a kind of regulatory gray zone. And that's our third big problem. The rules just haven't caught up to the tech. The regulators are basically playing a constant game of catch-up. Think about it. The regulations from bodies like SEBI were made for a totally different world. They really struggle to deal with modern tricks like algorithm-driven nudges that push you to trade, or dark patterns in the app design that trick you, or the whole new world of social media influencers pumping up a stock. And this is the business model in a nutshell. They offer you free trades for certain things, which sounds amazing, but the real money? Oh, that's made by nudging you toward much more complex and profitable services, like options trading or lending, or products from their partners. The free part is just the bait to get you in the door. So when you add it all up, the gamification that makes you trade too much, the selling of your data, and the fact that the rules are miles behind, you finally start to see the real price of free investing. In the end, it just comes back to that classic, timeless saying, all the confetti, the easy user interface, the free trades, none of it is really free. You are paying for it. You're just paying with your behavior, with your data, and maybe with your long-term financial health. So I'm going to leave you with a challenge, a question to ask yourself. Go ahead, open up your app, but don't look at your profits or losses. Instead, just count. Count how many trades you actually made this month. And then ask yourself, was every single one of those my idea, or was I nudged? Think about it,